Welcome to Routing for Success, the show where we interview today's top logistics professionals, giving them a platform to share their stories and best practices. Today we are talking with Erick Spronck. Erick is a contractor for FedEx Ground on the Linehaul side of the business, and he also happens to be a certified public accountant, which gives him a unique perspective on the industry. In this episode, we talk about Erick's start as a FedEx Ground contractor and how he nearly quit in those early months. And then we talk about fueling his growth using a combination of SBA loans and O.P.M, or other people's money, using outside investors. I'm pleased to present to you my conversation with Erick Spronck. All right, Erick, thanks for being here.
Thank you for having me.
So the Routing for Success podcast, we interview FedEx contractors such as yourself. Let's start before you had ever even heard of FedEx Ground contracting. Tell us a little bit about yourself, your background.
Yeah, even though I am a FedEx contractor, but as some of my clients know, I'm more so of a certified public accountant. Been one for over 20 years. And one of my corporate clients had a different business, did the accounting for him and a number of other clients. He sold his business, and about a year later, looked into and learned about FedEx Ground and made the move to that. I followed behind him and starting out doing his accounting work until it grew to such a size, and he brought in private equity and they brought accounting in-house that way. But all in around the same time, I was looking to diversify my business holdings and found a small operation back in 2016 to get started with 2 dedicated runs and 3 old trucks. And bought my first operation and started from there.
So 2 dedicated runs and 3 old trucks in 2016. How did you come across that opportunity?
If I'm correct, I think I found it through Biz Buy Sell. Pretty confident. Yeah.
Biz Buy Sell. Okay. And so you got in. What were those early days like? Did it meet your expectations, or were there any surprises?
Did it meet my expectations? Absolutely not. Were there any surprises from day one? So I jokingly remember the first driver that I got introduced to by the guy who sold the business, who was very nice and polite, but he told me he was quitting in 6 weeks. And then the second guy who I met on the team run, without being graphic, was a little more derogatory, thought he was property and being sold somehow. And so that didn't work out too long. And there was just, there were a lot of growing pains. I've told the story many times. Over a year and a half, I struggled with FedEx, but I doubled down, or before I doubled down, I was ready to walk away. But then I doubled down on a number of different fronts and then grew the business from there. So it was a tough go for me.
Can we talk a little bit more about that? Because, I mean, look, we try to keep things positive here on the Routing for Success podcast. This isn't a thing where we want to bash FedEx or bash the opportunity. We definitely want to address challenges, though. And I think it's helpful for people tuning in, especially for people who aren't FedEx contractors yet, but maybe they're thinking of getting into it. It's not all sunshine and roses early on. You can experience some real challenges. You just given us a summary that you experienced challenges. You had even thought about quitting and getting out of the business, but instead you chose to double down. Can you walk us through that story and that experience?
Yeah, and actually here's the comparison, because as we all know, FedEx is not a franchise system. It's an independent contractor. We all operate a separate business. I do actually have a franchise, been a franchisee for nearly 20 years with an organization. When you become a franchise in that, you go through a week's training program, and there are support staff that you can go to, both on a direct level and then also on a corporate level. So while you're paying royalties to the franchisor, it's in their best interest to help you succeed. This is, not in a bad way, but this is the exact opposite with FedEx. FedEx just expects you to be a contractor. They expect you to know everything. And because they want to distance themselves from the contractor and somehow being associated that they have control over you from a governmental standpoint, and you're just expected to know what to do, and you have to learn on your own. And the only way that you learn on your own is through hard knocks or potentially asking other contractors. Now, the one thing that I've noticed in the last 6 years, 7 years that I've been doing this is there is a lot more information out there with people like yourself and also people like me now mentoring other people, and the Facebook group. That there was none of this 6-7 years ago. So I had to learn all of this on my end. And so in my accounting practice, I have other FedEx contractors, and I've been mentoring them. And what took me 2 years to get to, these guys are now getting to, to 6 to 9 months. And one of my clients, who's grown pretty large, or a decent size, and his father, in a polite, joking manner, was, bitching about where is this going, and now all of a sudden sees the light at the end of the tunnel. And I said, you'll get there. Just give it a little bit of time. So again, coming back to this is there's so many more resources now available to new people to cut that learning curve in half or 3/4 that just wasn't available to me way back when.
So I feel like there's a good piece of advice in there, which is take advantage of the resources that are available to you, right? And cut your learning curve down.
Yeah, and wherever possible, like I did in my other franchise, even though I was more knowledgeable about that industry when I got into it. But mentorship, you got to find a mentor, who's somebody who's going to help you along. So and now I've got enough experience where I've become a mentor to others, and it's a way of giving back. But yeah, to the new guy, you need to, whoever not the new guy, but the new couple, the new husband and wife, the new whoever, you need to find mentorship.
Erick, you had talked about your challenges specifically with drivers in those early days. What other challenges did you experience?
Also, the same thing with the trucks. Again, not knowing anything about this industry. I do over the road. I don't do pickup and delivery. But 2 of the trucks that I had at that time, were approaching 1 million miles. And even the one truck that was in decent shape had 500,000 miles on it. And within 2 or 3 months, the motor blew, and there went another $30,000. So luckily I had the financial resources from my other businesses, from my accounting practice, to weather the storm. But this was all stuff that I just, wasn't initially prepared for. So what I tell new clients going into this business, you can even buy an existing you can buy existing contract business with dedicated runs, and you can start making money in a relatively short period of time. But if you think that you're going to be positive cash flow from day one, I'm sorry, it just doesn't happen. There's just a learning curve to any new business.
So continuing on that story, you had issues with drivers, you had issues with trucks, and those are really the 2 main pillars of the business. You've got trucks and you've got people, and you need to have effective strategies and know what you're doing around those 2 things. Erick, you had mentioned that you got to the point where you were ready to quit. Tell us a little bit about what was going through your head at that time when you were ready to quit.
Yeah. Again, it was just, having not grown the business. I had one dedicated run. It was a team run. It was also, I've learned in this business too, is while having dedicated runs are nice and very beneficial, but then there are better team runs than others. So that one was difficult to staff just because of its schedule. This was back in 2017 when everybody was, the economy was doing unbelievably well. Drivers, couldn't be found. Drivers, were jumping ship from one operation to another if somebody was paying them more. So it was just real difficult. And then, I had a family issue going on with my late wife at the time. And then still running my other businesses. So again, it was a number of different things. But what turned it around for me is I like to think that I'm, a pretty smart guy, like everybody does. I had successful businesses. I'm a certified public accountant. I passed the test the first time, which is a rarity, for most people. So if these other guys are doing it, I knew that I could do it. So I just kind of sat down and made a decision. And I brought on a kind of manager at the time that I didn't even necessarily need due to volume because I was still so small. But he had been a driver in FedEx, and he's still with me. He's become my fleet manager. And to the blessing to me, he is extremely well known, extremely well liked. He helped bring in some other drivers that helped ease the burden. And then around the same time, I got into purchasing brand new trucks. They came in, so that cut down the cost and the aggravation of trucks breaking down. And so all of a sudden, and literally within 4 months, things turned around and things got to be a whole lot easier to do.
So you doubled down and you turned that corner. What did your growth look like after that point?
Yeah, I have a different business model than a lot of other people. Again, being an accountant, being a CPA, I use what I call other people's money. So I mean, I use some of my own money, but I don't have unassigned runs. I have all assigned runs in my operations, and I've purchased all of those assigned runs. The reason that I do that is because then of the generally perception of guaranteed cash flow that can expect from doing the daily run, the weekly run. So when I started out with the 2 runs, then I found, people that were looking to sell other individual runs. And so then I think from the 2 runs, I went out and purchased another 3 runs from the Woodbridge terminal. So within that operation, went from 2 to 5 runs. And then more recently, in the last couple of years, have purchased additional entire businesses.
Eric, I'd like to talk a little bit more about that. One of the pieces of feedback that someone emailed me is someone sent me an email saying, "Hey, Ryan, it's great. You talk about people, you talk about trucks and operational excellence and having a good relationship with FedEx. A topic that would be really helpful for you to touch on, which I don't think any previous guest has, is how do you actually fund the growth of these businesses? How do you raise money to do this, either yourself, or either through debt or through outside investors? I want to know how these larger contractors actually manage to get the money to grow and finance that growth." So Eric, you had mentioned that you've traditionally liked to use O.P.M, other people's money. Can you tell us a little bit more about how you found those people and how you structure the investments for your outside investors?
Yeah. So, well, the first thing is meaning other people's money is using the bank's money.
The banks. Okay.
Right. That's one source, but I have also, have brought in other people. So using the bank's money, again, you have to have strong financials, meaning, you have to have, well, more so than, in addition to strong financials, you need to have great records. And I understand, and I say this many times, there are contractors out there who know the trucking business better than I do. They probably run a better operation from a logistical standpoint with their trucks or their drivers than I do. But being a certified public accountant, being a numbers guy, where my strength lies is providing a balance sheet and a profit and loss statement that the banks are looking for, that they know how to read, that matches what they're looking for. So it's easier for me than to provide the documentation that they're looking for that makes it more advantageous that they're going to want to loan me the money. And then again, nowhere never be the size of somebody like Warren Buffett, but I've continually rolled my money back into my businesses. I don't live, an extravagant lifestyle. I live in a middle-class neighborhood, and I've seen in the yards at times, guys driving around in what I consider, probably $120,000, $130,000 cars, and it's just, that's not me. I drive around, a 5-year-old car, 7-year-old car. So I've always tried to live the millionaire next door lifestyle. So which that benefits me in the long run. But coming back to it, when you want to work with the bank, I know what they're looking for. I know how they want the things, the balance sheet and the profit and loss statements to look. So it's important to give them what they want, and then they're willing to do business with you. Now, in reference to the other people's money, these are people that have been my clients and or associates that have financial resources that they're looking to invest elsewhere besides their 401k, their own retirement funds. And generally, these people have been willing to put in, a couple of $100,000 as a down payment, but that then goes in along with, an SBA loan or a loan with the banks. So, and then they have an equity portion. And then each individual deal is divided up, who gets what portion and based upon how much they put in.
So you had mentioned bank loans and SBA. Are you doing non-SBA bank loans for any of your organizations?
I haven't yet. It depends upon the bank. And I will say, usually the banks, once you get to a certain size, they do want SBA because it gives them the comfort level that, excuse my French, if the shit hits the fan for whatever reason, then the SBA is then going to, come in at 80 or 85% and approve the loan. The one thing, though, that I have heard and want to pass along to the viewers, that the banks will do SBA loans with FedEx. I haven't had a problem. But at the same time, you need to educate them. So the bank doesn't understand necessarily the FedEx model, so they need to understand what's going on with that. And once they get comfortable with it, then they're ready to do business. The biggest frustration or the biggest hangup the banks will have is that the FedEx only has a 1-year agreement. They prefer to have, like franchise agreements that last from 5 to 10 years. Then they think they've got a better guarantee. But again, it comes back to educating the SBA and your local bank how it works. And once they learn how it works, they know the FedEx name, they know the size of it. It's like dealing with UPS. It's like, okay, well, this is their way of getting a piece of the FedEx pie. They feel a lot more comfortable about it.
Now, Eric, I've had some people describe SBA loans as you're taking all of your chips and you're pushing them into the middle of the table, because many SBA loans are structured where you are personally on the hook. Maybe you even put up your house and a lot of your personal assets that are tied to that loan. So if something goes wrong with the business and it fails and you're unable to pay the debt, you could lose a lot personally. You have a tremendous amount of skin in the game. Are SBA loans inherently like that? Like, are all of these SBA loans that you're doing, you're putting your house on the line, or is there a different way that you can structure these?
No, that is very true, and I do have with one of my operations. Not only the house is guaranteed, the rental properties, are guaranteed, and that's just the way it works. The bank's going to want to secure their position as best as possible, and if you have other assets, they're going to go for it. The only ones that they can't go for it after legally is if anything you've got in an IRA or in a 401k. But you necessarily can't blame them. So the question is whether or not you believe enough in yourself in the FedEx model that you want to go this route. So I do. I'm about to complete my 4th SBA loan, with FedEx, and another SBA loan previously to that. In my particular case, coming back to it, not only am I paying my SBA loans, but I'm paying them ahead of schedule. And my one that I took out 2 years ago, at this moment right now, I expected to have it paid off in 7 years instead of 10, and probably will get it even done quicker than that. But the question is how fast do you want to grow? But it's an opportunity, because you can borrow up to $5 million, with putting anywhere from 10 to 20% down.
Now, I've had some people come on this podcast, Eric, who say, look, one of the things that really makes FedEx a great opportunity from a business owner standpoint is you can really leverage the business. And, for people who are listening who maybe aren't so finance savvy, leveraging the business just means using a lot of debt, right? Instead of taking your own money, your own cash out of your personal bank account and putting it into the business, you're using other people's money in the form of a bank loan or SBA loan. I've had a lot of other people come on the podcast and say, no debt at any cost, Dave Ramsey style, where, they don't want to utilize debt. And I've even had some people say, today there's just not really enough cash flow to have a lot of debt service. You don't want that. You want to own your trucks outright and have minimal or even no debt associated. Eric, obviously, from what you've told me so far, you're kind of in the former group. You're not afraid to use debt. But how do you view that, on the spectrum of doing tons of debt where you're really levered to the hilt, to the other end of the spectrum where you literally have no debt? Sounds like you're probably somewhere in between, but how do you think about that strategically as a business owner?
Well, for me, it comes down to any deal that I've done is it all starts in the beginning. And this is not a perfect example, but it's somewhat similar to real estate. And I've done a handful of real estate deals and have a handful of rental properties. You should know whether or not that you're going to make money on that real estate deal even before you make the purchase, even before you make the decision to buy it, based upon the numbers. So you've got to do the legwork. I've looked at FedEx opportunities, and a wonderful operation that I looked at a year ago, and contract had been around for 20 years. And what the guy was asking for it, and I ultimately showed him he was just asking way too much, that it just wasn't going to cash flow based upon the needs, and he was just out of line. And when I showed him the numbers, yeah, he made sense. Now, he wasn't willing to necessarily lower his price too much, but that being said, you just walk away. I'm closing on a deal next week with 7 dedicated overnight runs. I'm going to have, a note payment, I think of around $200,000 a year or more. But here's the big point. Even with the debt payment to the bank, knowing the numbers and even leaving a safety margin in there and having dedicated runs, I still expect to walk away with an extra $150,000 to $200,000 a year in free cash flow. That's including the note payment to the bank. So I'm creating greater wealth for myself, and it's a calculated risk, but it's a risk that I'm willing to take. So I don't take anything away from the people that are talking about, the no debt approach. But I got to guarantee or tell you, unless you've got deep pockets, you've gotten an inheritance, you won the lottery. If you're going to try to grow this business one truck at a time, one run at a time, by saving enough money from that operation to then go buy one more run or one more truck, you're going to be retired long before you get to any size and scale. Let me back that up another way. There are contractors out there that do very well with 2 or 3 runs, just like in my other franchise. There's people who've done very well with just 2 or 3 stores. And then there's people that look, to go to, either 50 runs or 100 runs or 50 stores or 100 stores, and they make a little bit less on each one, but they ultimately wind up making more overall.
So let's talk more about your outside investors. We had talked about SBA loans and bank debt and a little bit of your views on leverage. But Erick, you'd also mentioned that you have some other business partners who you've brought in. Are they involved operationally, or are they purely financial investors and you run the business day to day?
One of my operations, I've got 2 businesses right now. With my one business has a partner, and he is a FedEx contractor. I do most of it, but he's there to help, and that's fine. Interesting enough, when I bought a bigger operation in 2022, those are silent partners. And the way that we structured that particular deal is they're all entitled to, the equal share based upon their shareholder value. But I control the business. I run the business 100%. They have no say. There is a management agreement. I can't sell the business. I can't, merge the business without 75% of the shareholder agreeing. But when it comes to hiring drivers, who I hire, what trucks I buy, what runs we run, all of that day to day is 100% solely me. And if it were to somebody else, depending upon your situation, I would do something similar to that or recommend something similar to that for other people.
So these non-involved investors who you're bringing in, they're giving you money and they're expecting to get a good return on that investment. Are they having to personally guarantee any truck leases or SBA loans, or are they able to avoid doing that?
In this particular case, no. And this with what will most people won't know. So let me answer your question and then go in further into this. No, they're not guaranteeing anything. They are truly silent partners. Okay. Now, the way the SBA works is traditionally, if anybody has a 20% or more ownership, then the SBA is going to want them to also be personally guaranteed responsible and also put their financial information to determine the viability of the loan. So again, the way around that is that, you want to be a shareholder with me. I own, 50%, 40%, and everybody else owns 18%. And so they can put in whatever value you determine, that makes it justifiable. And that then gets under the SBA rules that they have to be a guarantor.
And how do you handle distributions and not just the actual money distributions, but also just the communication? Like, are you sending an email out to all of your investors monthly or quarterly or just once a year? How often do they expect updates from you on how the business is performing? And how often do they expect to see money landing in their account?
Yeah. So in this particular case, we're not, this is not like, Walmart or, General Motors, in that kind of sense where, I have certain legal obligations to providing communications and financials and all that stuff. Again, being a CPA, I have no problem doing it. In my particular case, I keep up with them, once or twice, at least once a month, twice a month, just generally what's going on. I am providing them quarterly, financials that both an income statement, a balance sheet, and a cash flow statement. In our particular, we've only been up and rolling for just a year now. We started in October of last year, so we actually generated a tax loss for them. So that benefited them from, a tax perspective, again, a K-1 with a loss to lower their other income. Because we're buying business and buying goodwill, we're adding in quite a bit of amortization expense, which also further lowers the net income of the business. So I expect for, X number of years that there will be, quote unquote, a tax loss, and it's going to benefit them on their personal return, but not necessarily a cash flow gain that they'll need to be. We are generating nice positive gains from a cash flow perspective. And so what I'm doing right now is paying down the loans faster, which is, what I've told them that was going to be the plan.
So, I'm thinking about this almost through the lens of like a real estate syndication. And you'd mentioned, Eric, that you've invested in real estate before. Do you feel like it's similar? I mean, do you feel like people who are giving you their money to invest on their behalf into FedEx, into this business, are they viewing it kind of as a long-term wealth building tool? Are they hoping to get a better return on their invested capital compared to just investing in like an S&P 500 index fund?
Yes, in general, because they're just looking to diversify their holdings. They most of these people, again, if they've got $250,000, to invest with me, this isn't their sole savings. And if it was, I wouldn't want it anyway. So these are people that are financially doing better already. They're not wealthy, but they're probably in the top 10% of what we would consider income wise. So yeah, they're looking for the pay down either when the loan gets paid off, and then we have positive cash flow that way, and then the distributions go out, or you grow the business, and at some point the business is then sold.
So Eric, let's talk more about financing or finances in general. And you've mentioned a few times that you're a CPA. I think that a lot of people tuning into this podcast will be very curious to hear from someone like you. And you're in a very unique position. There's CPAs out there who specialize in FedEx, and there are lots and lots of FedEx contractors, but there's very few that I'm aware of who are FedEx contractors themselves and also happen to be a CPA. And so I feel like that's going to give you a unique perspective on things. What are some tips or tricks that you feel like contractors might be missing out on?
Yeah, well, again, there's not necessarily tips or tricks. The clients that I have, all of my clients right now are doing over the road. So I don't have pickup and delivery. We've got close to a dozen of the guys. Some of them have been in the business for a little while. Some or X number of them are brand new. So for the pickup and delivery, I would say, it's more so a pretty straightforward business. You're paying your guys on the books. They're getting a W-2, and then you've got the depreciation on the vehicles, which are normally going to range, and basically based upon the size of those trucks, around 5 years. We talked about it too. There could be benefits to Section 179. And Section 179 is when somebody in the pickup and delivery buys a brand new truck for $50,000 or $70,000. They can fully expense it in 1 year. There's nothing wrong with doing that, but I was talking with somebody else. To me, the only downside to that is then, if you've got a successful business, yeah, it helps you in the 1 year, but now the next year you don't have any depreciation expense. So now all of a sudden in the future years, you may start having a bigger tax burden to the IRS. So me personally, I normally don't do Section 179 for the simple reason is I like to even out, what my taxability is going to be the IRS. Coming to the Linehaul, people do all kinds of things, some good, some bad. Some of it, or what I've seen sometimes, is mostly bad. From an accounting standpoint, what I would say first and foremost, you're investing so much money into FedEx that you need to do things by the letter of the law as best as possible and not look for shortcuts. The one example I'll give is I looked at a driver not too long ago. He showed me several pay stubs. The guy's making about $2,000 a week. And what the contractor is doing is that he's paying him for 40 hours a week, $20 an hour. He's getting taxable wages of $800. And then he's getting approximately $1,200 as, and I'll use my fingers, quote, as a reimbursement. It doesn't even say what the reimbursement is. Now, that may or may not fly by FedEx's rules. They probably meet the minimum payroll requirements, the minimum wage, and it does show a certain amount. But if it was ever viewed by the IRS, excuse my French, they're going to get their asses handed to them for violating payroll laws. And if you've got, it's not hard to start generating $1 million worth of revenue in any FedEx business. And so what I would say to these people, really, you want to save X amount of dollars, in taxes and then risk $1 million business, a $2 million business. I just think they're being foolish. Coming back to the Linehaul one piece of tip, most people do give, what they call a meal allowance or a per diem. That is allowed by the IRS, and the current amount is $69 a day for the time that they're out on the road. So my suggestion also too is that because we have the FedEx statement, do things by the book. You know how many days your drivers have been out. If they worked 5 days a week, then fine, they get paid $345 as a meal allowance. So in this particular case, they make $2,000 for the week. You can pay them $1,645 on the books and $1,655 on the books, $345 quote unquote off the books as a meal allowance and a reimbursement, and that's all legit. If they work 2 days out of the week, then you really should pay them $138 for the 2 days they worked, and don't pay them the $345. So,
is that difference in the days? I mean, not paying them the $345. Is that something that the IRS would catch in the event of an audit if you're paying someone the meal allowance for the full week when they didn't work the full week?
My experience having done face-to-face audit with the IRS, would it go that far? No, I don't think that the IRS would look at it. The IRS probably what they would look at is they would look at your meal allowance as a percentage of, say, your total payroll or of your total revenue, and does that amount make sense? So coming back to the other example that I gave you, and let's take this to the extreme. Let's suppose he's paying everybody $800 a week on the books and $1,200 as a meal allowance or as a reimbursement. So what you're going to look at on his P&L then, or in his tax return, he's going to show, just pick a number. In this particular case, he's going to show $80,000 for the year as taxable wages, and he's going to show $120,000 as a meal reimbursement. And that's, I can't say definitively, but I'd like to believe that the computers are going to pick it up, and it's going to be something that's going to be examined further.
What are some other strategies, when someone signs up to utilize your services, Erick, and they say, hey, I'm a FedEx Linehaul contractor, I'd like to use you as a CPA. What are some of the first questions or things that you try to learn about a business to try to identify, maybe holes in their, in their profitability, leaks in their P&L, so to speak?
Yeah. So again, being a CPA, being a contractor, they need to get up and rolling first, and they just need to learn the business on their own. And I will provide them, with advice and support as far as, writing an ad for Indeed if they're looking for a driver, referring, to, I've got a great company that I like for insurance, that all of the mentorships things that I've talked about. What we do provide to our clients, is once a month, we'll provide them a P&L and a balance sheet. Again, being a certified public accountant, the balance sheet is a standard format and it needs to look a certain way. And so this is one of the things that the balance sheet won't necessarily provide them insight into their business, but if they're going to the bank, will help them. I've created my income statement based upon the standard for income statements, but then also would have to benefit the FedEx contractor. So my income statements are based upon the first thing that we show as cost of goods sold is everything having to do with payroll, which is going to be normally one of the highest expense. After that, there's a simple category right below that for fuel, which is another one. And then below also in the cost of goods sold, which has subcategories, are the truck cost, whether it be depreciation, lease payments, the 2290, the base plates, repairs and maintenance, that kind of stuff. So then you have a gross profit. These expenses right there is, again, going to be the bulk of that. Then you have other things that are down below the line: advertising, bank service, legal and professional, some office supplies, and these are usually minimal. But one of the things that the clients that I've just started doing this past quarter, and I will continue to do now, which has been a big benefit, is because I use a standard chart of accounts. So all of my clients look the same. I export their P&L into an Excel spreadsheet, and then I match it up because there's subtle differences to certain businesses, but then I give a comparative. So for this past quarter ending for the first 9 months, I include not only my operations, because why should I hide mine from other people? And I want to see how I'm doing compared to everybody else. But now they have a side-by-side comparative with percentages. So my operation, one of my operations hypothetically is running 38% payroll costs. Another one's running 40%. Another one's 42%. Some other contractors running 36%. Another one's running 44%. And they can see where they stand on this. And so then, yes, they can come back with questions and we can talk about where they can possibly look to do, where they can do a little bit better. So having this comparative financials, P&Ls that show it in percentages, I think is going to be a huge benefit to not only myself, but to the clients. And it's something that I did with my other clients in my other niche business.
Erick, do you prefer to work with like brand new FedEx contractors just getting into the business, or do you prefer more to work with contractors who have been around for a while and they're just looking to optimize things or get some guidance with respect to their finances?
Again, it doesn't matter to me, because what we're doing is providing, a service of the accounting end of it, keeping good records, providing them good financials that they can then use to go to the bank with when they need to, or analyze their own business, and then complete, the tax return. So whether it's somebody new or whether it's somebody old, it's a job function, that needs to be done. Accounting is kind of like, an 8-year-old boy, telling him to brush his teeth, or on Saturday night, take a bath. It's important. Nobody wants to do it, but it needs to be done.
So Erick, we talked about SBA loans, obviously those can get pretty big and you can have a pretty big percentage of your business tied up in debt there. But other than that, the biggest thing that people are typically using debt for is to acquire trucks. And there's many different ways you can do it. You could use equity, you could use your own cash to purchase trucks. You have a decision to make as to whether you go with brand new trucks or used trucks, or you can finance them, or you can lease them. And there's some different leasing options out there. What do you like to do for your Linehaul businesses?
Yeah, and personally, again, and there's not necessarily a right or a wrong, and I think it also depends upon the situation. The operation that I'm taking over are overnight runs, and so this is the first time I'm venturing into those. That I'm normally doing day runs across the country, or out 500 miles and back the next day. For me personally, I had some issues with leasing trucks. Not that the cost wasn't beneficial there potentially, but I had more issues with how often the trucks got serviced. And then when the truck went down, could I get a loaner truck from, Ryder, from Penske, from Miller? And that was the bigger issue, and the quality of their trucks. So I personally, in part because I have the financial resources, I purchase brand new, just like I have, with a usual personal vehicle. And then we're doing the maintenance on, or we're having the maintenance done on a regular basis. We have, a basic software program to keep that. So this way we know what's going on. I also structure my finances so that my trucks are not upside down. The last thing I ever want to have is the truck gets totaled for some reason, or the truck, has got 1 million miles on it and I still owe $20,000 on it and it's not worth anything. So when I do something, I usually like to put 15 to 20%, even 25% down on the truck. And I do my loans, for no more than 48 months, sometimes 42 months. This way I know they're quote unquote always right side up. But I also know too, for other guys who are doing local overnight runs, it can benefit them. They don't need to buy a brand new, $200,000 or $160,000 brand new truck. Their truck's only going out 100 miles, one way, or possibly 150 miles. And so they'll traditionally buy the used truck from somebody like me, who my truck has now got 500,000 or 800,000 miles on it, and they'll get 1 to 2 years out of it. And that will work just as well too for them. So there is no panacea. There's no magic, say that any situation is the best situation. It comes down to what your finances may be, and what makes sense for you. And again, when it comes to purchasing trucks, it depends upon whether or not you've got the money, to put a down payment on it. Again, I know other contractors, who'll put very little down, and they'll do, 6-year loans and 7-year loans. They want the lowest payment possible, and they've always got a truck payment, but that's not my business philosophy.
So your personal philosophy, you're putting 15, 20, even 25% down, and then you're financing on a 48-month term, typically buying brand new trucks. For providing the financing for that, so for the other, 75, 80, 85% that's being financed, what are some things you look for, Erick, when you're seeking out a lending partner for that? Are you just going to your local bank, or who do you like to use?
In the past, I've gone to my local bank because part of that reason is developing the relationship. The bank likes to make money off of that. And they also like to have money in their accounts, because then that allows them to loan out more money to other customers. The simple meaning is that, how much they have on deposit. But in certain cases, I've also done loans with some of the other people that, people have heard about. And I have with you folks, or is it Jake Hirsch? I've done 1 or 2 loans with and had great service. So for me personally, for me, it's more about the service. I'm not going, as long as the interest rate is roughly within a 1/4 point, maybe even a 1/2 point, because I'm only doing a loan for 4 years. I don't worry about the interest rate so much as other people. Some people, will use the Walmart mentality of the Southwest. They'll go wherever the cheapest things they can find. Again, I've built my businesses more so on relationships. But if there was a big enough difference between interest rates, then I would go with, who I had done business with and who had the best rate.
Yeah, so this podcast, Routing for Success, is put on by AP Equipment Financing. That's where I work. And Erick, you had mentioned that you work with Jake Hirsch, who is one of our account managers. So thank you for the business. We appreciate you.
Erick, and I have no problem saying Jake has, I've worked with Jake before. And again, the service has been phenomenal, with him. And so I'm actually starting to have a bad relationship with my personal bank. And so when time comes down the road, I'm probably very likely going to look for other sources. So for me, it's about relationships.
Erick, I think this is probably a good place to wrap up. We've been talking for a little over 40 minutes. For the people listening in who are either interested in getting into the Linehaul business, or maybe they're already involved, but they're looking for a CPA, they'd like to talk to you and consult your services, how do they get a hold of you?
Yeah, I guess I'd have to give my contact information. I've talked to a number of people, X number have become clients, and some people just get free information. And I'm happy to do that too, because again, it's a way of giving back. So depending upon how you want to do it, I'm happy to give out my cell phone number and my email address, and they can contact me when they like.
Well, we'll put some contact information in the show notes. So if you're listening to this in your car, check out the show notes on Apple Podcasts or Spotify. If you're watching this on YouTube, just look at the description, and we'll put some contact information for Erick down there. Routing for Success is brought to you by AP Equipment Financing. In today's competitive market, it is essential to acquire the right trucks at a fair price and finance them in a way that makes sense for your business. Leveraging their extensive network of truck and van suppliers, the experts at AP Equipment Financing will help you locate the best deals on step vans, cutaways, panel vans, and more. Deliver them straight to your facility and finance them with low monthly installment options. Click the link in the description or visit apfinancing.com for more information. Routing for Success is an independent production of AP Equipment Financing and is in no way affiliated with or endorsed by FedEx Corporation, FedEx Ground, Amazon, or any other logistics company discussed herein. Thank you for joining us for this episode of Routing for Success.